Hey, good morning everybody. Today is Friday, September 9th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started today by taking a quick look at the Nasdaq Composite. But before we do that, stocks closed modestly lower yesterday. Volume was mixed, higher than the prior day on the New York Stock Exchange, but lower on the Nasdaq. The S&P 500 tested and held support in the 2175 area before closing down 4.86 points or 22/100% at 2181. The 22/100% lower close combined with the higher trading volume gave the S&P another distribution day. But like a lot of distributions since confirmation of the current uptrend on June 30th, this was not a terribly egregious distribution session. According to our count, the S&P now has 5 distribution days in the past month, but is poised to lose one over the weekend due to age. The Nasdaq closed 24.45 points or 0.46% lower at 52.59. Volume was lighter than the prior session. The Nasdaq has only 3 distribution days according to our count, and one of those will fall off our count due to age this weekend. Distribution doesn't seem to be a major concern at this point. Note that our distribution count is different from investors.com, which tends to count distribution as relevant longer. The older distribution is, the less relevant, and we remove distribution days from our count when they reach a month old. After flirting with a very suspect margin signal yesterday, our market timing model has fallen back to a buy signal. This is the 4th change in signal in the past 4 trading sessions. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. The investors.com market timing outlook is on a confirmed uptrend in the market, with a distribution count of 3 days on the Nasdaq and 6 on the S&P. Declining issues bettered advancers by about 6 to 5 yesterday. New highs bettered new lows. Small capitalization stocks continued to beat large caps yesterday and continue to outperform on a 10-day moving average basis. The bulls prefer to see small caps outperform. The market continues to move sideways. The S&P remains in the 40-point range it's been in for the past 7 weeks. The long-term sideways movement in the market is playing havoc with our market timing model. We're back on a buy signal after flirting with a margin signal twice this week, and after both the S&P and the Nasdaq were flirting with a don't buy signal last week. For now, traders should remain cautious and careful and keep your stops in place and current. Okay, yesterday, Nasdaq was down 24.45 points or 0.46%. We closed at 52.59, tested support at this long-term trend line. This trend line goes all the way back to the beginning of the bull market back in 2009. That trend line held. Trading volume yesterday was lower than the prior day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have 3 distribution days in the past month. That's not a lot of distribution, and note that this distribution day will fall off our count over the weekend. We also aren't seeing distribution clustering on the right side of the chart. Distribution really isn't a concern for the Nasdaq at this point. Our market timing model is on a buy signal, and right now the Nasdaq has support here at the July 2015 high in the 52.32 area, and really no resistance. Let's take a look at the S&P 500. Yesterday, the S&P was down 4.86 points or 0.22%. We closed at 2181, and notice how the S&P has been trading sideways really for 7 weeks now. Yesterday we came down, we tested support down here in the 2175 area and held. We closed down more than 0.2% on heavier trading volume than the prior day, which is our definition of a distribution day. The S&P got another weak distribution day yesterday. S&P right now is trading in a confirmed uptrend. We have 5 distribution days over the past month, all fairly evenly spaced, and we don't see any clustering of distribution days on the right side of the chart. 5 distribution days over the course of a month is starting to be a little bit of a concern for the S&P, but note that this distribution day will fall off of our count this weekend, and so not as much of a concern as it might have been. Our market timing model on the S&P is on a buy signal. Right now the S&P is bracketed by support right here in the 2175 area and resistance at this prior high. Before we go, let's take a look at our position trades. We currently hold 7 position trades, which is quite a few. Generally we don't want to hold more than 5 positions. We hold Alibaba, which we bought on the breakout from this cup and handle base when we gapped out on earnings. We paid $85 for Alibaba. Right now it's trading at 102.57. Next we have ACIA. We bought ACIA when it broke out of this IPO base. It fell back into the base and we were forced to sell it. When it broke back above that pivot point, we bought it again. We paid $43.10. We're trading at 117.89. Next we have MaxLinear. MaxLinear we bought on the bounce off of this 200-day moving average at 17.34. MaxLinear is giving us a little bit of a concern here. Notice how we've traded back below the 50-day moving average. We'll keep an eye on MaxLinear. Next we have Zimmer Bio. Zimmer Biotech we bought on the breakout of this first stage base at 123.43. Stock's now trading at 130. Edwards Life Sciences we bought on the breakout of this 3 weeks tight base at 117.46. Currently trading at 117.33. And Mobileye. Mobileye we bought on the breakout from this first stage base at $50.18. The stock immediately fell back into the base and right now is trading at 48.93. Mobileye is a concern, and if we were to need to raise cash, that would probably be the first stock that we sold. And finally, yesterday we bought back Line Corp. Line Corp is a Japanese-based provider of a networking platform for mobile messaging, communication services, and content distribution. Essentially, it's the Facebook of Japan. The stock initially broke out of this IPO base. Keep in mind, an IPO base is a very aggressive entry and lends itself to tremendous volatility. We broke out of this IPO base at 44.49. The stock went up, made a high up in this area up here, and never really did much after that. It fell back into the IPO base, and by rule, when a stock falls back into an IPO base or falls below its pivot point, in this case at 44.49, we automatically sell. And so we sold Line Corp here. Yesterday we broke back above that pivot point, and so we bought the stock back. We'll give it another chance here. We bought at 44.49, it closed at 45.10. Let's take a look at our swing trade. But before we do that, yesterday the Nasdaq Composite closed above its 5-day simple moving average and above its 10-day simple moving average. We show the 5-day in pink, we show the 10-day in green. The 5-day is trading above the 10-day, and that's our definition of a buy long signal. buy long signal indicates that swing traders can be adding positions to their portfolios at this point. Currently in our swing trading portfolio we have SIMO, which we bought on the bounce off of this 50-day moving average. CYBR, we bought on the bounce off of its 50-day moving average. EDU, ditto, bounce off of the 50-day moving average. SUPN, we bought on the bounce from the 50-day moving average. And OLED, we bought on, let's add a 200-day moving average here. We bought earlier this week on the bounce off of its 50-day moving 200-day moving average. And finally, yesterday we were stopped out of HWAY, Healthways. We bought the stock right at this consolidation high at $26. Yesterday the stock closed 3.18% below that buy point. By rule, we sell any swing trade that closes at least 3% below its purchase point. If you want to know more about swing trading or position trading, please feel free to contact me. My contact information is on the homepage. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the homepage. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.